Have you ever wondered if the way we move money is fundamentally broken? Every day, billions of dollars flow across borders, yet the process is riddled with delays, high fees, and uncertainty. For individuals and businesses alike, sending money internationally can feel like navigating a maze of outdated systems and hidden costs. Sending money across the world is slow, expensive, and tangled in a web of banks. Each transaction can take days to settle, with multiple intermediaries taking a cut along the way. For many, this system is a source of constant frustration and lost opportunity. But what if a technology could move money in seconds, for fractions of a penny? Imagine a world where value moves as quickly and seamlessly as information does on the internet. No more waiting, no more excessive fees. That's the promise behind XRP. Created by Ripple, XRP aims to be the digital asset that powers instant, low-cost global payments, making financial transactions as easy as sending an email. Some believe XRP could reshape global finance, while others see it as just another speculative asset. The debate is fierce, with passionate supporters and vocal critics on both sides. Here, at Crypto Insider, we're here to cut through the noise and explore what's really at stake. We'll look beyond the headlines and hype to uncover the real story behind XRP's rise and the challenges it faces. This isn't financial advice, just a deep dive into the technology, the theories, and the community's passion. We want to help you understand what makes XRP unique and why it inspires such strong opinions. XRP was designed to solve a specific problem: cross-border payments. Its goal is to connect financial institutions and payment providers, making international transfers faster and more efficient. Unlike other cryptocurrencies aiming to be digital cash, XRP targets the multi-trillion-dollar world of international banking. Its focus is on transforming the infrastructure that underpins global finance. This focus has made it both a favorite of institutions and a target for regulators. The regulatory landscape is complex, and XRP's journey has been anything but smooth. The big question: can XRP bridge the gap between traditional finance and the digital economy? Or will it remain a speculative asset? The answer could shape the future of money itself. Let's break down the most talked about theories, the technology, and the psychology driving XRP's story. Join us as we explore whether XRP is truly the key to unlocking a new era in global finance. At the heart of XRP's story are bold and sometimes controversial price theories, each offering a unique perspective on the token's future. These theories spark passionate debates and energize its global community, drawing in both seasoned investors and curious newcomers. The most famous theory positions XRP as a bridge currency for banks, aiming to replace the need for vast sums locked away in foreign accounts around the world. In this vision, banks would convert their local currency into XRP, transfer it instantly across borders, and then convert it back, unlocking trillions in trapped capital and streamlining global finance. This idea fuels wild price speculation, with some arguing that if XRP were to handle even a small fraction of global transfers, its price could skyrocket to unprecedented levels, making early adopters incredibly wealthy. Others imagine a dramatic Great Reset, where the entire global financial system is rebuilt on blockchain technology, with XRP serving as a neutral, decentralized anchor for value exchange. While this theory is highly speculative and far from certain, it captures the imagination of many who dream of a radically transformed financial world. On the other hand, a more grounded perspective focuses on utility, arguing that as Ripple's on-demand liquidity platform gains real-world traction, XRP's value could grow steadily, driven by genuine demand and practical use cases. In this scenario, adoption is gradual, slow at first, but accelerating as more institutions join the network and the benefits of scale become clear, creating a powerful network effect. Whether you believe in explosive, overnight growth or a steady, incremental rise, these competing theories shape the community's optimism, skepticism, and ongoing debate about XRP's true potential. Next, let's explore how XRP could actually change the way banks move money, and what that might mean for the future of finance. Today, sending money from New York to Tokyo means navigating a slow, costly chain of correspondent banks. Each institution in the chain takes a cut, and every handoff introduces more paperwork, more waiting, and more uncertainty about when your funds will actually arrive. Each step adds delays and fees, with money often taking days to arrive. For businesses and individuals alike, this outdated process can be a major headache. especially when time-sensitive payments are involved, or when cross-border trade depends on fast settlements. XRP offers a radical alternative. Your dollars are converted to XRP, sent across the XRP ledger in seconds, and instantly converted to yen. This digital asset acts as a bridge, eliminating the need for multiple intermediaries and making the entire process seamless and transparent. The process is nearly instant and costs a fraction of a cent. No more waiting days or worrying about hidden charges. Payments settle in real time, and the savings can be significant for both banks and their customers. Ripple's on-demand liquidity replaces the old, inefficient system with a digital bridge asset. This technology allows banks to move money globally without tying up capital in foreign accounts, making cross-border payments as easy as sending an email. For banks, this could free up trillions in dead capital, locked in pre-funded accounts worldwide. That money could be put to better use, invested, lent out, or used to support new business ventures, rather than sitting idle just to facilitate slow payments. Instead of parking money everywhere, banks could buy XRP only when needed, boosting capital efficiency and saving billions. This shift could fundamentally change how banks manage liquidity and risk, making the entire financial system more agile. But adoption isn't easy. The financial system is slow to change, highly regulated, and risk-averse. Banks must weigh the benefits against the risks, and regulators are watching every move closely. For XRP to become the backbone of global finance, it must prove itself secure, reliable, and compliant. Trust is everything in banking, and any new technology must meet the highest standards for security and transparency. The challenge isn't just technology, it's trust, regulation, and convincing banks to embrace a new way. Changing the habits of an entire industry takes time, education, and a willingness to innovate. The promise is huge, but the path is long and complex. The journey to a new financial future will require collaboration between banks, regulators, and technology providers. So, what stands in the way? Regulation. Navigating the evolving legal landscape is the next big hurdle for XRP and the banks that hope to use it. XRP's future hinges on regulation, especially in the US. The SEC lawsuit cast a long shadow, but a 2023 court ruling clarified that XRP isn't a security when sold on exchanges, a big win for Ripple. Still, banks need clear, predictable rules for custody, taxes, and compliance before they'll fully embrace digital assets. If major economies set clear guidelines, adoption could accelerate. If not, progress could stall or fragment. Regulatory uncertainty remains the biggest hurdle. Even with clarity, banks move slowly. Pilot programs can last years. The vision of XRP as a global standard is a long-term play, shaped by law, innovation, and partnerships. Global trends could set the stage for XRP's rise. Persistent inflation and eroding fiat currencies are driving interest in digital assets. The rise of central bank digital currencies, CBDCs, could be a catalyst, not a threat. CBDCs will need a bridge for cross-border payments. Ripple positions XRP as that bridge, offering interoperability between digital currencies. Geopolitical tensions and the desire to move away from US-controlled financial rails make a neutral settlement layer attractive. These shifts, rising inflation, CBDCs, and geopolitical realignment, are opening cracks in the old financial order. The demand for faster, cheaper, and more resilient payments is growing. Whether XRP fills that gap is uncertain, but the opportunity is real. XRP's appeal starts with its technology. The XRP ledger. Unlike Bitcoin's energy-hungry mining, XRPL uses a fast consensus protocol, confirming transactions in 3 to 5 seconds for a fraction of a cent. This speed and low cost make it ideal for high-volume cross-border payments. The ledger even has a built-in decentralized exchange for direct asset trading, but controversy surrounds its decentralization. XRPL relies on a list of trusted validators, not open mining. Critics say this makes it less decentralized. Ripple argues it's a necessary trade-off for speed and scalability. Ripple also holds a large share of XRP, selling it to fund operations, fueling debate about corporate influence. These issues, speed, cost, governance, are central to XRP's story. Its strengths are clear, but questions about control and trust remain. For XRP to win over the financial world, it must address these concerns head-on. Technology is only half the story. Community sentiment drives crypto markets. The XRP army is one of the most passionate, amplifying news and fueling optimism online. This loyalty creates a strong support base, but also a hype cycle that can detach from reality. Influencers can spark buying frenzies or panic selling, often based on speculation rather than facts. FOMO, fear of missing out, pushes people to buy in during price surges, sometimes leading to bubbles and sharp corrections. Confirmation bias keeps investors in echo chambers, ignoring critical perspectives. Recognizing these psychological traps is crucial for anyone in crypto. The crowd is powerful, but not always rational. Staying objective is key. Navigating crypto requires critical thinking and skepticism. Always question the source of rumors and trace claims to official statements or data. Seek out both bullish and skeptical voices to avoid echo chambers. Focus on real-world adoption and utility, not wild price predictions. Sustainable value comes from solving real problems, not hype. Prioritize education, research, and patience over emotion and rumors. Stay curious, keep learning, and approach crypto with a clear, open mind.